For years, Burkina Faso followed the same pattern as many African nations rich in natural resources, collecting a meager 3% royalty on gold mined by foreign companies while exporting raw materials and importing expensive finished products. It was the same old story. Outsiders reaped the profits, while the local population saw little benefit. That changed dramatically when Captain Ibrahim Traoré rose to power in 2022. His takeover wasn't just political. It was an economic shift that rewrote a narrative long controlled by foreign hands. Traoré asked a question that no leader before him had dared to voice. Why should foreign corporations walk away with the majority of the wealth pulled from Burkina Faso's own soil? That single challenge sparked a transformation that would send shockwaves from mining boardrooms in London to Toronto. Gold extraction in the country was nothing new for years. International mining giants had divided the land like slices of cake, shipping truckloads of gold toward distant ports, while local communities remained trapped in poverty. The system worked perfectly for them, but left Burkina Faso among the poorest nations on earth, with most citizens surviving on less than $2 a day. The young captain saw a country producing over 60 tons of gold annually, yet still relying on foreign aid, and decided the equation didn't make sense. His solution began with the creation of a state-owned mining company, the Société de Participation Minière du Burkina (SOPAMIB), intended to prioritize national interests over corporate gain. Initially, it appeared to be another bureaucratic agency with lofty promises, but it quickly proved to be a declaration of economic independence. Within months, 5 major mining assets, previously operated by big foreign players like Endeavour Mining and Lilium, came under state control. Companies that had long enjoyed favorable deals suddenly faced a government unwilling to play by the old rules. This was not a chaotic grab for resources, but a calculated strategy. Contracts were renegotiated, terms were reset, and the government made it clear Burkina Faso's gold would serve its people first. The message to multinational corporations was blunt: no more sweetheart agreements, no more extracting wealth while leaving communities destitute, and no more treating the nation as a colonial outpost. The reaction from the global business community was swift. Mining companies watched in disbelief as the government took over operations, sending their share prices tumbling. These firms had operated for decades under deals that allowed them to keep most of the profits, while African governments were left with just 3 to 5% royalties. Traoré flipped that model, demanding equal partnership instead of handouts. Foreign companies could stay, but only as fair partners. The results have been staggering. Since 2022, Burkina Faso has earned roughly $18 billion from gold exports, a figure equal to the country's entire GDP before Traoré took office. This isn't theoretical wealth. It's money flowing directly into the national treasury, funding development, infrastructure, and job creation. The achievement is even more striking considering the nation's challenges: ongoing security threats, political instability, and harsh climate conditions. The key to this success wasn't new technology or vast new gold discoveries. It was retaining more of the value chain within the country, instead of selling raw gold at base prices and allowing foreign companies to profit from refining and marketing. Burkina Faso is now positioning itself to earn from every stage of production. It's a direct challenge to the entrenched colonial economic model in which Africa supplies raw materials and buys back expensive finished goods. The confrontation between the government and multinational miners was intense. These companies arrived expecting a compliant administration, but found a leader determined to protect national sovereignty. The state not only had legal authority and public support, but also physical control over the land and mines. That combination left even the most powerful corporations with little leverage. In one decisive move, the government nationalized the gold mines for around $80 million, resolving a dispute between Endeavour and Lilium by simply taking control. This demonstrated a new power dynamic, one in which the state could dictate terms rather than be dictated to. Even more significant was the technology transfer that followed. For decades, mining firms had kept critical knowledge, from equipment maintenance to geological surveys, outside Africa. creating dependence. When foreign operators left, they took their technical staff with them, expecting operations to collapse. Instead, Burkina Faso's mines adapted, developing domestic expertise through reverse engineering and new partnerships. In doing so, they broke a cycle of dependency that had kept the country from fully benefiting from its own resources. Western mining giants long insisted that their proprietary technology was irreplaceable, but that claim didn't hold up for long. Engineers from China, Russia, and even Burkina Faso's own technical institutes proved that the barriers were not as insurmountable as they were made to seem. Open-source mining software, alternative equipment suppliers, and joint training programs quickly broke the monopolies that had kept African countries dependent. In less than 2 years, SOPAMIB had trained local engineers to carry out geological surveys that previously required expensive foreign consultants. Local technicians learned to maintain and repair heavy mining machinery, tasks that foreign companies once claimed only their own specialists could handle. High-cost, licensed mine planning software was replaced with affordable alternatives that delivered the same results at a fraction of the price. International investors reacted exactly as expected. With outrage, mining stocks tumbled, lawsuits were threatened, and diplomatic pressure was applied. But the collapse they predicted never came. Burkina Faso's economy continued to grow, defying forecasts of disaster. This unexpected success has pushed other African nations to rethink their own resource deals. If one relatively small country could generate $18 billion in gold revenue simply by reclaiming control over its resources, why were others still tied to colonial-style extraction models? Nations like Mali and Niger have taken note. The old argument that Africa cannot manage without foreign expertise and capital is losing credibility in the face of such tangible results. The impact has gone far beyond gold mining. Once a government successfully stands up to powerful international business interests and wins, the tone of every future negotiation changes. Telecommunications, agriculture, and banking are suddenly open to fairer terms. The shift has also put pressure on the traditional development model, which focuses heavily on foreign aid and investment rather than domestic control. If a country can fund its own growth by properly managing its natural wealth, the need for aid begins to shrink. Of course, not every African nation has Burkina Faso's gold reserves, and not every leader has Traoré's determination to challenge global economic powers. But the example shows that dependency is not inevitable. The $18 billion in revenue is impressive, yet the bigger question is whether it marks a true transformation or a short-lived windfall. Sustainable resource management is not just about collecting money, it's about converting that wealth into lasting prosperity. Burkina Faso faces the same challenge that has undone many resource-rich African states in the past. The so-called resource curse. Oil-rich, diamond-rich, and gold-rich countries have all generated huge revenues only to see the money disappear into corruption or unsustainable spending. However, early signs suggest a more disciplined approach. Instead of treating gold revenue as a political slush fund, the government is channeling it into infrastructure, education, and diversification. The idea is to create an economy that can stand strong long after the mines run dry. This long-term vision marks a sharp departure from the old habit of treating resources like quick lottery winnings. Too many nations have prioritized immediate consumption over capacity building, leaving them poorer in the long run. Burkina Faso's strategy aims to use today's gold to fund tomorrow's industries, building domestic refining plants, supporting jewelry manufacturing, and creating downstream industries that keep more value within the country. With $18 billion in gold earnings, the nation now has leverage it never had before. Wealth allows choices, the choice to pick partners, dictate terms, and protect national interests instead of bending to foreign demands. This economic independence has consequences that stretch into security and diplomacy. A country that funds its own military and development is far less vulnerable to external pressure than one relying on aid. The figure isn't just about gold. It's about what's possible when an African country refuses to be a junior partner in its own economy. Yet the journey is just beginning. Maintaining output, investing wisely, and avoiding the traps of mismanagement will determine whether this becomes a permanent success story or a missed opportunity. As more African governments consider this model, international resistance will likely grow. Western mining corporations, foreign governments, and global financial institutions all have a stake in keeping the old order intact. But now there is proof that another path exists. One where African nations control their own resources, set their own terms, and reap their own rewards. In 2022, a young captain took a bold risk. Today, Burkina Faso stands as living proof that an African nation can defy entrenched global powers and win. The gold beneath its soil is more than wealth. It is a statement of sovereignty, dignity, and self-reliance. Whether this sparks a continent-wide shift or remains a lone example will depend on the courage of other leaders. One thing, however, is clear: the conversation around Africa's resources will never be the same again.